Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 11th, 5:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video using Zoom. Retiring GoToMeeting, too many bugs. They couldn't fix it. I got frustrated. After using it for years and years and years, reliably, no telling what happened actually, but Zoom not actually designed specifically to just record desktop videos, but it can be used for that. And that's, since we have a license, that's what we're going to proceed with. Let's see how it works out. So state of the market, we're in an uptrend since the O'Neill follow-through days on 11/1 and 11/2 of last year. Check the trend gauge over here. We've got the coveted 4 green arrows, do have a yellow sub arrow on leaders as they started to pull back late last week and pulled back a bit more today. That was amid sector rotation. Sector rotation is a very good and healthy thing for a bull market. It means that money is not leaving the market. It means it's just being reallocated. And that's one of the reasons why we have a large core holding in the S&P 500. Every time these sector rotations occur, they all occur within the S&P 500. It tends to smooth it out as opposed to somebody who was all in defensive sectors or all in growth sectors. And it has served us pretty well. So what happened today, as I said, rotation day with leaders pulling back again. Here are the numbers. The numbers look, some of them look worse than they are. And this was mostly because of leaders pulling back and big tech pulling back. Some of big tech pulling back anyway, but under the surface, we liked what we saw. Big Seven down 0.91%. Meta led the way lower, down 4.4. RG8, this is our 8 growth ETF composite, down 0.84. FFTY, this is the IBD 50, and this is more evidence that leaders were pulling back today as that was down 2.8%. A lot of leaders just getting too extended, doing normal pullbacks in most cases, a couple of them breaking below the 21-day moving average, however. S&P 500 opened down 0.25% and pulled back a bit after the open, but then just slowly ground its way higher to almost even before pulling back into the close, only down 0.11%. And we'd like to see the equal weighted at positive on the day by 0.13. This is another piece of evidence about the rotation and the breadth of the market. NASDAQ 100 down 0.37, but equal weight on the positive side. Dow up 0.1%. Mid caps down 0.45, Russell 2000 small caps down 0.8, Global 60/40 down 0.15, in-house GROTECTION down 0.41%. None of our stops got hit today. Close on a few, but we use that balance at risk statistic for every holding that we have, and it gives you a sense of comfort of not knowing that you don't need to panic sell if something was down because all the work was done ahead of time. And then sometimes we override it, of course, depends on what's going on with the overall market. But today, no reason to. So let's get into it. Start off with the S&P 500 and undercutting. And by the end of the day, back above the 8-day exponential moving average. Let's take a look at a 15-minute chart here. You can see the gap down. So here's what now is looking at a little bit of a very much too far, too fast. This was the move out on the jobs report Friday morning before a pretty harsh pullback, bounce, and then pulled back again into the close, followed by a gap down. And this coincided with a massive reversal by NVIDIA, AMD, and really a bunch of semiconductors and tech AI stocks. So here you see the gap down today, but then here's that higher lows and higher highs pretty much all day before a little fade into the close, and we'll take this with the sector rotation that accompanied it. NASDAQ 100, weaker, but held the 21-day moving average down 0.37. Dow Jones Industrial Average, undercut but reclaimed the 21-day moving average. Mid caps bounced off the 8-day exponential moving average, and small caps closed just below the 8-day moving average on after reversing on some euphoria Friday morning along with the rest of the market. The VIX up today, but closed at the lows of the day, which is what we want to see as that coincided with the market rallying as the day went along. The dollar, not a whole lot of action here on the dollar. Did close at the top of the range and positive on the day, but it's not holding back the precious metals. Tight inside day here after a little bit of euphoria on Friday. We like to see that. That's resting. So that's gold stock. Sorry, that's GLD. That's gold. Oh, by the way, PHYS, a lot of people kind of prefer this because they swear that it's backed by physical bullion. And it's owned by Sprott and they do audits on it. So if you don't trust the GLD trust, PHYS is another way to play gold. GDX, gold stocks, outside positive reversal to the upside. So good stuff there, weak early, strong late. And silver, not quite keeping up with gold, but closing positive on the day as well. Bitcoin, new highs over the weekend, new highs today. You can see just reading a lot of stuff about different funds that allocate assets inside them, changing their prospectuses so they can buy Bitcoin ETFs. And we talked about how we expected this to happen, and it's definitely happening. So there's BITO. We own IBIT, got back into it after the big shakeout, got back into it last Thursday and Friday. Bonds, BND, not a lot of action in bonds today. Very tight range, which is good. Taking a bit of a rest. 3-day pullback there, slightly on the TLT. TYX, the long bond, up just a tad with the price down, and TNX, the 10-year, up 0.37, again with the price down. So onward to the tail of the tape. I'll hit the highlights. Tomorrow morning, possible market mover, CPI, measure of consumer inflation. Day count, 13-day consolidation since the breakout above the 51 or 50-50 level on the S&P 500. Fourth day above the 8-day with the undercut and reclaim on the S&P. 43 days above the 21-day moving average and 86 out of the last 87. Sectors strong today, solars, gold and silver stock, oil, and then some defensive sectors, and this is the rotation. Basic materials, staples, and utilities, and software after getting hit hard last week, making a comeback today. To the downside, semiconductors continue to revert to the mean. Biotech pulled back today. In-house, we took the NVIDIA hedge off for a small gain after NVIDIA, the panic selling stopped and it undercut and held the 8-day exponential moving average. And we bought FCX. We'll show that chart in a minute. Adjusted beta from 1.26 to 1.39. Bottom line on the day, healthy sector rotation while the leaders underperformed. We'll see what tomorrow brings and make our changes accordingly. Every day after 10 o'clock, we raise our stops on everything that we have in-house and know what and that's after like the opening shakeouts happen. And then we see where we stand going forward. So let's start with what we bought today, FCX. And you got a double bottom pattern here showing very clear relative strength. Commodities kind of have been outperforming. And again, this is some of the rotation that we've talked about. But a shakeout day last week, gap up, and then nice tight inside day yesterday, and then moving to a higher high, still within the base. Nice setup here. Good low risk entry for copper here. We can see if it get above the pivot. We can add to it. We've got the alert set there. Let's go through the portfolio now. The other 9 holdings that we have, individual stocks anyway. So here you can see NVIDIA undercutting, reclaiming the 8-day by the end of the day, still down 2% on the day. Still our largest position. AMD, we did some offensive selling on this on the gap up last week. Don't like the close below the 8. We want to reclaim that as soon as possible. CrowdStrike struggling, but still holding the 21-day moving average as volume started to dry up today. Uber pulled back, bounced at the 21-day moving average. Weatherford oil stock, nice day today, higher high, up 3%. Palantir, strong early, faded late, pulling all the way back. It was positive early while the rest of the market was pulling back, and then just faded as the day went along on below average volume and sitting on the 8-day exponential moving average. Lilly breaking the 21-day moving average, minor change of character on this, but we only have a 2% position left, and we give it to the 10-week/50-day moving average because we've got some nice gains on it, and the 50-day is above our cost basis. FCX, I mentioned, we bought that today. Ralph Lauren on the edge. We already cut half of it, but undercutting and reclaiming the 21-day moving average today on slightly above average volume. And Dell, the data center name, pulling back and bouncing at the 8 EMA. A couple other data center names pulled back today too. Coherent holding the 21-day moving average. VRT, which had been on a great run after its earnings. Harsh negative reversal on Friday, bouncing at the 21 today, right where we want it to. And SMCI, the data center stock leader, very similar action to NVIDIA, undercutting and then reclaiming the 8-day moving average by the end of the day. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com if you're interested in becoming a client. You can email my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it's designed with a dual purpose. Participate in market uptrends, get defensive during market downtrends. 3 bull markets for the market since late 2018, 3 bear markets, I should say. We got the taper tantrum in Q4 2018, the COVID, 34% in just a couple of week pullback, and then we had the 2022 bear market. Those 3 bear markets, Revere dodged them all, losing significantly less than the market because our rules, not our opinions, get us out of the way. And if you're interested in this approach, by all means, reach out to us. And with that, I'm going to wrap up the video for Monday, March 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.